China is teaching the likes of Apple and Tesla a very painful business lesson. All right. So let's get into it. Starting off with this article, they just basically go into there was a time when the American CEOs were basically looking at China as a land of opportunity and like untapped territory, a place to go and grow their business. There's over 1 billion people there, and they love American culture and American products, right? So that was the plan. That was always like an easy plan, at least for the last 20, 30 years in the 90s and the 2000s, to grow. So after years of ascending growth, some of the most powerful U.S. tech corporations have started to slide hard and fast in the world's second largest economy amid the new reality of doing business in China. Beijing has endorsed uber nationalism. In turn, sentiment toward Western business has soured. That's especially so as domestic companies have stepped up as viable alternatives. And it's all created a dangerous race to the bottom to win over consumers. So the companies that are growing in China, that are local and that have more of a grassroots movement and understand the culture more, obviously, because it's their culture, they are propping up. They're popping up left and right. They're getting funding. They're learning how to iterate and how to make products and services on the same level as American visiting or businesses that are over there. So with the presence of those small companies or those newer companies, it makes it easier for for Beijing, for the government of China to push those companies and because there's now a viable alternative. And you need to know that if you're investing in companies, in American companies that are doing business in China, because a lot of the price of these stocks are based on growth in customers in China. So you take away the growth of new customers in China from these companies like Apple and Tesla, and they're not going to be valued the same because they're going to lose sales if they're going to lose a significant portion of their sales if they don't have access to the Chinese consumer. So let's see. Let's skip to some better stuff. So the battle for tech supremacy. That's where the new race is going to be. That's where the new war is going to be. Is going to take place. It's going to be based on technology. That's going to decide who runs the future, which country runs the world in the future. So Apple's been struggling to get new iPhones into the pockets of Chinese consumers, with data from Counterpoint Research showing that sales plummeted by 24% in the first 6 weeks of 2024. Tesla, meanwhile, suffered a huge slump in shipments from its Shanghai Gigafactory last month, which was February, with 60,365 vehicles shipped. Bloomberg reported this. That's 16% lower than its shipments in January and 19% lower than the same month last year in 2023. So year over year, that's 19%. That's a 19% drop for the month of January. So things are going in the opposite direction. That's a bad sign if you're invested in Tesla. So data from the China Passenger Car Association shows all these numbers. Okay, that's where they're getting it from. So Apple's net sales in Greater China may have been down by 13% in the last 3 months of 2023, so the fourth quarter, from a previous year, but they still generated revenues of $20.8 billion. So they're not saying the sky's falling. They're not saying that you should be bearish, but you need to know which direction things are going for these companies. So iPhone anxiety is just very important because the iPhone is Apple's number one product. That's their bread and butter. Um, so that's like the canary in the coal mine if things aren't going well for that phone. In Apple's case, there's a few things. Gene Munster, a managing partner at Deepwater Asset Management, told Business Insider that the decline did have something to do with American products falling out of favor in China. Let's see. That has certainly been the case. Last year, the Chinese government actually banned the use of iPhones for their government officials, making it less appealing to have one for a lot of people in China. Investors responded by wiping $200 billion from Apple's value. So when the news came out of that last year, the price dropped and they lost $200 billion in value. That ban coincided with the launch of Huawei's Mate 60 Pro. Now, Huawei used to be the top phone company in the world before America banned them and got their allies to ban them a few years ago, citing national security risks from a bunch of having a bunch of Americans or European or Western citizens having the phone and having their data on the phone, and then the Chinese government basically controlling the company of Huawei and then using that information for their own purposes. So but Huawei is like no joke. Like they used to be right up there with the iPhone and with Nokia as far as like being a phone manufacturer's powerhouse. A locally made 5G, because the way they talk about it in this article is like they talk about Huawei like they're bench warmers, like they're just some new random foreign company, but Huawei is a behemoth still, and they were even more massive of a company before the U.S. Put the squeeze on them a few years ago. But a locally made 5G smartphone that many saw as a breakthrough device that rivaled the iPhone's capabilities, which they were able to do because they are already, they're already master phone creators themselves. That's how they was able to create a phone to rival, the iPhone, despite export bans preventing the use of industry-leading U.S. components. So they couldn't even use U.S. made smartphone parts that you would put into the smartphone to make it like more valuable, make it work better, make it more sustainable. They couldn't use it because there were government bans on importing the products, and they still were able to make a dope phone that Chinese citizens loved. Counterpoint's research shows that unit sales of Huawei phones climbed 64% in the same period that iPhone unit sales fell by almost 25%. Both the U.S. and China are becoming more isolationist. So they're closing off walls and they're saying, hey, buy us. We're going to buy our own stuff. It's like they're separating themselves from outside influence or from collaborations, basically. So in Tesla's case, a wider EV market slowdown, which took shape last year, is likely to have been particularly felt in February, given the generally slower sales during the month's Lunar New Year festivities. But last year, the Lunar Year was actually in January. It wasn't in February. More broadly, though, the slide for both is a sign that China's battle with the U.S. for tech supremacy is getting more serious. So, for years, Chinese companies adopted the strategy of copycatting as they attempted to build consumer electronics, electric vehicles, and other industries from the ground up. That meant trying to replicate what their Western counterparts did, often to an inferior standard. That's not the case anymore, though. As Huawei's Mate 60 Pro shows, Chinese consumers now have a homegrown phone that offers an iPhone-like experience. Local EV makers such as BYD, Build Your Dreams, are meanwhile enjoying a surge as they manage to win over consumers with vehicles that are much cheaper than Teslas, and they still look good too. In January, BYD reported a 43% rise in sales, but lost its market leadership to Volkswagen, according to Car News China. It had also cut the prices of its best-selling models by an average of 17%, according to Reuters. But so did all the other companies too. Or I know Tesla did. They all dropped their prices dramatically. So this is the big deal. If you own Tesla, you got to understand that EV sales of electric vehicles have dropped dramatically over the past 6 months. So if you think that that's only temporary, then hey, maybe now's a good time to buy Tesla shares or EV car shares. So I know myself, I don't give financial advice, but myself, I definitely bought more shares of Tesla, and I bought shares of Lucid, and I bought shares of Rivian, because I do believe that the downturn in EV car sales is temporary, and that eventually they're still, it's still the industry of the future. So if you're willing to, since I'm willing to hold on for the long term, then I'll just wait, be patient, which has been hard for me to do in the past. I was definitely impatient with Tesla, and even though I bought my first Tesla shares in 2013. So, but yeah, I don't want to make that mistake again. So this time I'm just going to hold and wait. And yeah, we'll see what happens. I did invest in BYD, but I didn't keep the shares because they kept putting my cost basis like $2 or $3 above where I bought it. So I'm guessing maybe those were fees, since it is a ADR, or it is like a foreign stock. So it gets complicated, but I have been looking at BYD since 2020. Same with NIO and the other EV stocks in China. I think the other one's called Lee something. But yeah, so the battle for supremacy is expected to get a big push from Beijing too. So when Premier Li Chang, I think it is, set out China's 5% annual growth target at the start of the National People's Congress this month, it became clear how vital technology would be in driving that forward. That means Beijing is expected to play a more active role in catalyzing the growth of its domestic tech sector and squeezing any foreign entities that get in its way. The Wall Street Journal reported that a directive known as Document 79 was being ramped up to push out Western companies. It asks state-owned companies in a range of sectors, such as finance and energy, to replace foreign software in their IT systems by 2027. Bam. Look at that. Them just fighting words. They tell them to kick out all the foreign owned software and products and stuff like that. Like, they going hard. So, but yeah, stay tuned for the next Read and React here on Grow with Kezio, where we try to grow, where we are on a journey to grow generational wealth 1 week at a time. Like this clip and subscribe to my channel. Then click the bell for notifications if you enjoy this content and want more of it. All right. Until next time, I'm out. It's Kezi.